China is quietly becoming the most important life insurance market in the world. While the United States is still the global leader in total premiums, China is growing so fast that many experts believe it will eventually take the #1 spot. But this isn't just about numbers. It's about culture, economics, government policy, and a radically changing society. Today, we were going to explore why China's life insurance market is exploding faster than America's, and why Chinese people are buying policies at a rate that is shocking the rest of the world. To understand what's happening, you first have to understand how quickly China has changed. Just a few decades ago, the entire country was poor. Families shared everything, and financial products barely existed. Today, China has the second largest economy in the world. Hundreds of millions of people have joined the middle class, and the country now has more millionaires than any nation except the United States. When economies grow this quickly, people start thinking about the future, and that's where life insurance comes in. But unlike in America, where life insurance is mostly about protecting income and replacing earnings, in China it serves an entirely different purpose. Chinese families are not just using life insurance to prepare for death. They're using it as a tool for savings, investing, retirement planning, and even legally reducing taxes. To the average Chinese family, life insurance has become the safest place to store wealth, because they don't fully trust the stock market, banks, or even the government's pension system. Instead of putting money into unpredictable investments, they put it into something that feels secure: insurance. To understand why, you need to look at China's cultural foundation. In Chinese society, family responsibility runs deep. Adult children are expected to take care of their parents. Financial support across generations is normal. This concept is known as filial piety, and it has shaped Chinese behavior for thousands of years. But now, with the one-child policy leaving millions of families with only one child, that pressure is intense. One child may have to support 2 parents and 4 grandparents. That's 6 dependents. Life insurance has become a way to prepare for that future burden. Instead of waiting for the government to solve the problem, Chinese families take it into their own hands. Another key factor is trust, or the lack of it. For decades, Chinese people have distrusted banks, the stock market, and the housing market. Real estate used to be the main investment for Chinese families, but the housing crisis, with collapsing developers like Evergrande, destroyed confidence. As the government cracks down on speculation, many people are turning to life insurance because it feels guaranteed, stable, and protected. It gives them peace of mind in a world that changes very fast. This is something most Americans do not feel the same way about, because in the United States, people invest in 401 KOS mutual funds and stocks. In China, the appetite for risk is much lower, and the desire for predictable returns is much higher. We also need to talk about one of the most important forces in modern Chinese life: the government. Unlike in America, where the life insurance industry is mostly independent and competitive, China's insurance market is heavily shaped by national policy. The Chinese government actually encourages people to buy insurance. Why? Because it reduces pressure on the state. China knows its population is aging rapidly. It knows pensions will not be enough. So instead of paying for every citizen's retirement, it promotes private insurance as a solution. Chinese insurance companies have huge influence, massive distribution networks, and a level of state support that American insurers could only dream of. Another reason the market is exploding is because insurance in China isn't just sold. It is aggressively marketed. Insurance agents are everywhere. They visit homes, run events, make TikTok videos, and build relationships with entire families. In America, people often avoid insurance agents. In China, buying insurance from someone you know builds trust, and many policies are sold through personal networks. It has become normal to insure every family member, even newborn children and grandparents. The goal is not just protection, it's long-term wealth management. There is one more layer that often gets ignored. Life insurance in China is not just about death. It's about life. Most Chinese people buy policies with cash value, living benefits, and savings components. They get returns, dividends, and withdrawal options. In other words, life insurance is used like a bank account or investment fund. It is not uncommon for wealthy Chinese citizens to store large amounts of money in insurance because they see it as safer than storing cash anywhere else. In some cases, high-net-worth families use life insurance as a way to move money abroad or avoid inheritance taxes. In China, policies are not just products. They are financial strategies. So how does this compare to the United States? In America, life insurance growth has slowed. Most people rely on employer coverage, and many young Americans don't buy any insurance at all. The cultural mindset is different. People prioritize investing and entrepreneurship over long-term guaranteed contracts. Americans are used to risk. Chinese people are not. And that is why insurance is booming in one country and stagnating in the other. There is also a generational shift happening. Young Chinese professionals are now wealthier than their parents, but they feel more financially insecure. They do not trust pensions, they fear unemployment, and they are very worried about the future cost of healthcare and aging. Instead of spending money freely, many are saving aggressively, and insurance fits perfectly into that mindset. The industry is also becoming digital, with companies selling policies through apps, AI advisors, and even social media influencers. China skips traditional financial systems and jumps straight into the digital world, and that creates explosive growth. But here's the big question: is this insurance boom sustainable? Some experts say yes. China is simply catching up to the rest of the world. Others say the market may get overheated, with too many savings-based products and not enough real protection coverage. If the economy slows further, people may not be able to keep up with their premiums. There are real risks. But even if growth slows, the cultural shift has already happened. Insurance is now a normal part of Chinese financial life, and that will not go away. And here's the most important part of all: China is not an exception. It is the future. Other countries like India, Indonesia, and Vietnam are moving in the same direction. As people get richer and governments shrink social safety nets, private insurance becomes the default solution. China just got there first, and at extreme speed. So why is China's life insurance market exploding faster than America's? It's because Chinese people see life insurance as more than protection. It is savings. It is retirement. It is tax strategy. It is cultural duty. It is stability in a world that changes every day. It has become the backbone of the Chinese middle class, and eventually it may become the backbone of society itself. This is Global Wealth Lens, and if you want to understand the future of money, not just in America, but everywhere, make sure you subscribe. Because finance isn't just numbers, it's culture, psychology, and everything that shapes how humans survive and plan for the future. The insurance revolution is already happening, and China is leading the way.